Zillow stock had one of its worst days in the market ever, dropping near 25% here during regular trading hours. This now puts the stock down over 66% from its peak that it hit earlier this year in February. In the span of like 8 months, this company has wiped out billions of dollars from its value. And to draw comparisons to its closest competitors, Opendoor and Redfin, we can see that while all three are negative year to date, Zillow is by far the worst performer of the bunch. But if we rewind just a month and a half ago, we can see that all these three names are more or less at the same level at that point, but since then, there has been a big divergence. Essentially, what the market's saying is that some of these businesses are better than the others. It's pricing them differently, and maybe that ends up being right in the long term, or maybe that ends up being a mistake, and a big sell-off here in Zillow could be a buying opportunity. Our job as investors is to kind of identify these opportunities, take advantage of them if it's a good business, and profit over the long term. So in this video, what we're gonna do is we're kind of look into Zillow here, try to figure out what's driving this price decline, and more importantly, how its current valuation now compares to its peers to figure out if this stock makes sense to buy. And let me just be clear and upfront, it's not so black and white here with Zillow. There's a lot of considerations you need to make if you want to own this stock. So guys, if you appreciate the insight in this video, you find anything valuable in here, hit the thumbs up at any point during the video. It helps the channel out tremendously and I truly appreciate it. So anyways, let's first talk about this massive sell-off here in the stock. Clearly, big money has decided they want to exit Zillow at this point, which has resulted in this massive sell-off, and we need to understand why. So Zillow reported their earnings yesterday and it was not great. EPS missed by quite a bit, bringing them to a loss for the quarter when profits were expected, and revenue, although up 165% year over year, missed by a big margin as well. But here's the interesting thing. The outlook for Q4 for revenue is 2.4 billion versus an expected 1.96 billion, so very nice there. But the negative again was the EBITDA loss that they're predicting, which is between 136 and 186 million dollars. In this environment, with the Fed now tightening their tapering, interest rates possibly rising in next year, stocks that lose money and stocks that are predicting to lose even more money in the future are not ones that Wall Street wants to hold, and you can see that by the massive dump today. This results in these stocks getting re-rated lower, and you can see here this is evident. You know, we had downgrades from some of the big firms. Here, for example, going from a $217 price target to a $130 price target. But interestingly enough, even though a lot of firms have downgraded their price on Zillow, it's still well above where the stock is at today. The analysts compiled by TipRanks here predict a 68% upside in the next 12 months on Zillow, even though earnings did disappoint. So we're getting a lot of mixed signals here. We're getting downgraded prices, but we're getting massive upside potential. That typically doesn't go hand in hand, so what's going on? Well, I think that this is actually a perfect example of what is happening right now in Zillow stock with kind of the give and take, the bulls and bears fighting, because investors are very divided on this company right now. They don't know if this is one they want to buy into or sell, because there has been huge changes that the company announced, which affects their fundamentals and affects an investment thesis, especially if you're a massive bull here in Zillow. So I guess this is a good time to highlight what this fundamental change is, so let's jump into that. The first line from the earnings report here reads that they are winding down their Zillow Offers program, which was when Zillow would try to flip homes themselves essentially. They'd buy it at a cheap price and try to sell it a bit higher, and this is resulting in a 25% workforce reduction with the company. They then go on to say that they realized Zillow Offers was just too risky, it was too volatile, and it provided little opportunity for return on equity. And that is the big announcement. That is why Zillow stock is down massively. And with this news, there's now two camps for Zillow. One camp says this is great news. This makes Zillow a lot more capital efficient now because they're able to let go of 2,500 jobs, which means ultimately more profits. It also means that they're going to become more stable now because they've kind of eliminated this volatile part of their business. And ultimately, it'll help the company become less of a risky investment because the massive risk from owning real estate is eliminated. Some investors even go on to say that even though Zillow failed at this, they're glad that Zillow tried because it shows that they're trying to innovate, try doing something different, try to feel the market and see where they can continue massive growth. So they're okay if the company fails at some of these ventures like this. Okay, well, points noted. I totally understand that perspective, but now you have the other camp that's just howling here, and so far, based on the stock price, they're winning. This is the camp that says, how did Zillow not realize that this was going to be a risky and volatile business? Everyone knows that real estate does carry risk because you're owning physical assets. You have to spend a lot of money there to own that. And if the market corrects, you're kind of stuck with those assets. You're going to incur huge losses if you sell. It's kind of a given if you're in real estate, right? And you would think experts at Zillow would know this as well. This, of course, brings the management's competence into question. Is this a management team that you believe is competent in leading Zillow further? Are you willing to forgive the members of management that essentially has lost hundreds of millions of dollars for Zillow, and as a result, billions of dollars from their market cap? That's also a very fair argument, and honestly, right now, there's no right or wrong answer. We can just see what the market's telling us, and the market's telling us they're in that second camp. They do not buy management story. They do not believe in management. They think that with this huge mistake the management made, there needs to be some changes to actually give confidence to investors again. And if you were someone that held Zillow stock before the sell-off, and the whole Zillow's offers part was a big part of your thesis, I mean, that's not part of the business anymore, and that's why you're seeing a lot of investors sell out of the stock, including probably some massive funds, which has driven the stock price much, much lower. And honestly, if you want my opinion on this, I can't blame people that are selling out, because when I see management make a big mistake like this and lose the company hundreds of millions on something that they should have foreseen, volatility and risk with this, I don't feel too confident putting my money in a stock like this right now. But that being said, I have an easy decision to make. I don't own Zillow stocks. I don't have to worry about, selling it and all that kind of stuff. I just have to see if the prices just get so irrational that even with the management team in place, the stock is just so oversold that it'll bounce at some point. That is a potential here, especially after today's sell-off. Now, one way we can kind of determine if the stock is actually showing us value now, being undervalued because of the huge selling, is to compare it to its peers to see where Zillow stands when we're putting it head-to-head with the Redfin and Opendoor. So here are kind of the key metrics that I looked at. Zillow is the largest of the bunch even after this massive selling, but was much larger, guys, before this week. They're also the most profitable of the bunch with a positive EPS expected next year, and they have the strongest margins by far versus their peers. However, I do suspect that some of these figures will get adjusted and revised once we see the Zillow offers transition out of their model. Nonetheless, with what information we have today, price to sales sits at around a 2.14, which for this sector is kind of in between its peers. I know some people just kind of blanket price to sale. They say, oh, at 2 price to sales, that's super cheap. It's relative. If you look at it compared to its peers, it's not super cheap because you do have a company that's even cheaper that you can buy here technically based on this metric. But, looking at this sector, the kind of real estate tech type companies, its price to sales is kind of in between, and it's kind of fair if anything. But now that being said, the numbers that I used here, not 100% confident on, because I think there's going to be a lot of changes. A lot of analysts are going to revise things. Numbers are going to change in the next few weeks, and we're going to have to revisit this sometime in the future. Because if I look at Yahoo Finance, for example, they show next year's growth to be $9.15 billion in revenue. But if you look at other websites like Seeking Alpha, they showed us $7.7 billion in revenue. I don't know which one is more accurate, so I went with the more conservative number here to draw some comparisons. But again, Zillow has positive margins. Zillow is the only profitable company right now based on EPS versus the peers, so that does hold some value, and that's probably why it's been the number one player in the space. Also, on top of that, if you look at Google Trends data, you can see that Zillow is much, much ahead. It's much more searched versus Redfin and Opendoor, which kind of solidifies its number one spot. We can also see that how over the years, this company has continued to improve and grow its top and bottom lines. So from that perspective, looking at the actual data, we can see that they have improved as a business and they are more efficient now as a business year over year. But I think, if you're considering buying Zillow stock today, you have to ask yourself the question of which camp you belong in. Management is an extremely important factor when making a decision on an investment, and you have to believe in the management team if you want to own the stock. That's just my personal thoughts on this matter. Ask yourself, do you believe that this management team is going to be able to get past this, turn things around, and make Zillow the #1 premier player once again? Or do you think that this management team has just messed up here? This whole Zillow offers thing was a huge mistake and they lost credibility because of that. Clearly the company has short-term headwinds. They're gonna have to take a few quarters probably to get past all of this and kind of transition this completely out of their business. So I don't think the stock is necessarily gonna bounce back to like $100 per share or something like that anytime soon. We may see some short-term volatility, but in the meantime, if this company interests you, it's a good opportunity to research further, understand their model further, and decide whether you want to buy into this or just leave it for a bit more and see if it sells off even more to a point where you just can't pass up the value. Anyways guys, let me know in the comments down below what you decide. I hope you found some insight in this video, and I hope there was some value here that actually helps you become a better investor. Anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.